Well, I think we've got everybody connected now, so I'd like to welcome everybody, both in UK and Turkey. So good morning to UK and good afternoon to Turkey. We have a very important webinar that we have two distinguished and eminent speakers who are going to enlighten us in terms of their experience and knowledge when it comes to the economies in both our countries, and also just how we can deal with them going forward. So it's going to be a very enlightening 1 hour. We want to get a lot of QA in, because that's very important in getting feedback from the people that are on the line. From what I understand, we have over 200 registered on this webinar, and I think that just shows the importance of, one, the subject, and two, the interest in our bilateral relations between, obviously, Turkey and the UK. Just looking back, I mean, BCCT, for those that are not aware, is the second oldest British chamber overseas. We were established in 1887, so we're 133 years old. And it's quite clear that I've been here since that particular time. You can see my grey hair. I'm showing my age now, but anyway, we have a long trading relationship with Turkey, and that's a clear indication as to how it's been sustained over that period of time. I mean, looking at recent bilateral trade between our two countries, last year, 2019, our bilateral trade value grew by 10% to £18.3 billion, and we've seen the Turkish economy over the last 10 years growing, in high single digits, and that shows the potential that Turkey currently has. And obviously, we want to ensure that our bilateral trade grows at the same level that the Turkish economy grows. So, we're working on it, and obviously, we'll see a dip because of COVID. I don't want to mention COVID too much. I think we're all well aware of what's going on around the world with this terrible pandemic. But if we look at the opportunities that Turkey represents, and to some extent this is related to COVID, we are getting more and more inquiries from UK companies who are now turning to Turkey. I think companies in UK particularly, and in Europe, are looking to shorten their supply chains. They want to bring their customers closer and their manufacturers closer to home markets, and Turkey is in an ideal position to actually satisfy that requirement. So looking forward, there are going to be new opportunities as companies move away from Southeast Asia and particularly China, and we believe that Turkey has a great opportunity to fill that objective that people are looking for now. So it's not for me to talk, excuse me. We've got, as I say, two eminent and distinguished speakers. First of all, Professor Vedat Akgiray is going to talk on some of the financial issues and looking at the Turkish economy, both as it is today and going forward. Vedat Bey is, as I say, a very distinguished professor, both in the academic world and also the commercial world. He's currently director of the Center of Research for Financial Regulation and Corporate Governance at Boğaziçi University, one of the top universities in Turkey. He's also been involved in the Capital Markets Board in Turkey, and is also a consultant and involved in both financial and technology and digitalization. So, a broad breadth of experience in all aspects of financial services. And I'm going to hand over to Vedat now to let him share his knowledge and experience on the subject that we're facing today. Vedat Bey, thank you.
Thank you, Chris. Good morning and good afternoon to wherever you are. I mean, these days are very difficult days to talk about the economy. But then these days are the days when we have to talk about the economy, what we expect and what will come up. So I'll try to do my best. But following in the footsteps of the famous economist, John Maynard Keynes, who said optimism is the highest level of intelligence. So at least to give the appearance of being intelligent, I chose to be an optimist. So please discount my words in that direction. Now, unfortunately, this pandemic is, from a financial viewpoint, economic viewpoint, is similar to nothing we've seen in recorded history. It has caused a sudden stop in both demand and supply. I mean, to the best of my knowledge, it's unlike, except for war times, this is something of its own kind. And people are talking about how we will recover, what will happen, will the pandemic go away, what will happen with the virus and all those things. It's all an unknown. I mean, there's too much uncertainty. The governments have stepped in with extremely generous support, supporting liquidity, small business all over the world. My personal view, I mean, they did what they had to do, but it was in the wrong format and probably triggering bigger uncertainty for the future. But that aside, I mean, there will be a huge debt pile up and problem of moral hazard and all those things. That can be topic of another meeting. The Turkish government has also taken several steps, several measures, though in relatively smaller scales compared to some other countries in terms of percent of GDP. But they are all doing their best. I mean, and continuing. The shape of recovery is still unknown. For example, IMF recently, Chris, revised their forecast of global GDP growth, and the forecast was revised downwards, obviously. For example, for this year, 2020, they're expecting an 8%, a negative 8% growth in the US, more than minus 10% in the Euro area, a similar number for UK, minus 10.2%, and a surprisingly small number, minus 5% for Turkey. But these are forecasts, and they are very much different from what they had 2 months ago in April, and I'm sure they will revise them several times throughout the year, depending on how the pandemic evolves, basically. It seems that we are living after the famous economist, not very famous, but famous in our circles, Frank Knight in 1920s, in his book, he defined a world of uncertainty, and that has been known as Knightian uncertainty since then. It's a world where risks as we know it are very difficult to measure, especially quantifiable risks. And unquantifiable uncertainty becomes the fact of the day. That's the type of world I think we are going through these days. So under such conditions, I mean, speaking like as an academician is very easy, obviously. My hand is not under the stone, as they say it in Turkish. But business models based on conventional, pure economic forecasts, GDP, growth rate, exchange rates, interest rates, so on and so forth, today cannot be more than games of chance, because things are changing very fast, very fast. But then this is a challenge, but inside every challenge for smart and prudent business people, uncertainty of the 19th type also implies great opportunities for some extra profits, some excellent profits. So as some well-experienced business people, financial people have said from time to time, think of the fundamentals only. Think of the economy, UK economy, Turkish economy, how big they are, where they've come from, where they're headed. Despite all the short-term unknowns and mishaps that may happen, think of the fundamentals and make your decision accordingly. I think, this is a time we have to behave like that. Or at least I cannot tell you more than that. Now, the Turkish economy it seems it will contract less than most of the major economies. Actually, all countries will have a negative GDP growth this year, maybe except China, which I'm not very sure yet, and maybe a number of smaller countries. Okay. Turkish economy, which has been surprising us for years, I mean, again, I think may surprise us. That's just a hunch feeling. Okay. For several reasons. There seems to be yet to be fully explained resilience in the Turkish economy for some reason, which are hard to list basically. For example, supply chains are up and running. I mean, to a great extent. There has been a slowdown in sales and production, but no big disruption there. Okay. So this implies a yet to be capitalized, a strong industrial base, a backbone in Turkey, especially in the SME world. Medium and small, medium-sized companies, mostly, not very small ones. Another thing we have in Turkey, Turkey has been fortunate about is that we don't have a big financial industry, which will be in need of potential bailouts. So there's not much to bail out in terms of financial institutions in Turkey. And banks are in a relatively very healthy position. So, I mean, there is not a big enough financial industry in Turkey which will cause a bigger problems like in the US and partly in the UK. That's bad in principle, but as an opportunity, it's good that it's small these days. And most importantly, young population. I mean, there's a big young unemployment in young population, but then, I mean, as being a professor, being with young people every day for the last more than 30 years, I know that they want to work, they want to produce, they want jobs, they want better jobs, they want to be richer. There is a pool of population like that. Chris, I don't know if I don't know how long should I start this. Maybe then I'll let you catch up after that. Now, I thought of UK and Turkey geographically, historically, the European Union, China, US, and in all those dimensions. Now, UK is a powerhouse in the west of Europe, the Eurozone, and Turkey is smaller, but also a powerhouse in the east of Europe. So the Eurozone is basically in the east and west are bordered by UK and Turkey. That's geographically interesting, financially capitalizable, and the two countries have some relative comparative advantages. For example, no need to say, UK, London is a financial center. There's a strong financial industry. That's where know-how is produced for the whole world. And there's a good level of governance know-how in the UK. Governance in all platforms and in all scales. I mean, how to do business, how to govern the business. It's better known in the UK than in Turkey. But then in the UK, there is not much of an industry left. Industry meaning physical industry. It's more of a financial economy and a service economy. In Turkey, there is, relatively speaking, a strong industrial base, which is still ripe for tremendous potential growth with the help of a better financial system and a better governance structure. So this triggered an image in my mind where, I mean, these business people of these two countries can cooperate using their relative advantages for a better joint end, actually. And that's, I mean, that's a strategic word, not a daily thing, but cooperation using these facts, a combination of these competitive advantages, first of all, can easily bring a sizable growth in bilateral trade. That's very easy. Okay. It can open the doors to Africa, Central Asia, and several other geographies where either country has a head start. For example, Turkey can be a gateway for UK businesses to Africa. And that's the trend last few years. Okay. And a cooperation in this sense can also bring in a strong challenge to German and Chinese industrial presence in Eastern Europe. Now consider Czechia, Slovakia, Poland, and foreign direct investment by EU countries, Germany leading them, and China. And that can be challenged. Okay. So to sum up, to start up the discussion, UK finance and governance experience, plus Turkish industry and its potential and desire to grow the industry, the sum of the two is big power, actually. It's a great opportunity for business people for both countries. I mean, Özgur Bey should forgive me for saying this. We should look beyond pure export and import relationships. That's easier. And today we have, as Chris mentioned, a volume of 19 billion pounds. That is small, but it's growing. It can be doubled, no problem. But I think strategically, looking at the world where it's going, we can look beyond that. Now, plus 10 years ago, Chris, you and I can remember these days better than others probably. The exchange rate between Turkish liras and dollars was only 1-to-1, more or less. And 1 lira was worth $1, something like that. And today it's around 7, and trying to go higher every day. If you think of this, investment in Turkey in the long run, forget about short-term calculations, in the long run is much more lucrative and potentially profitable for UK business people who know how to manage their finances. And that's an opportunity I see. I'm not trying to look nice to people in both sides of the continent, but that's how I see it. What should be done? I think I'll leave it to the second part of the discussion. Am I saying the right things? Is this what people would like to hear? I mean, I'm sorry.
Yeah, go on.
Okay. That was the intro.
Okay, Vedat Bey. Well, very interesting, and we have a few questions that have been raised. I mean, just a few just to be going on with. A question: can you explain what you mean by concerning the pandemic? They did what they had to do, but was it not the right format?
With that, I meant, I mean, if you look at what the Fed is doing in the US and ECB in Europe and in many other countries, I mean, it's basically they are helping grow the debt burden on people. I mean, the global level of debt before the pandemic was less than $300 trillion, all kinds of debt. And by the end of the year, I'm afraid it will be much higher than that. I mean, debt is a burden, which will be a burden in the coming years, especially on the public, on governments. And that's a dangerous way to go, globally, not for UK and Turkey only. Plus, most of the help provided by the governments has been in the form of new credit or restructuring or lower interest rates. I mean, those days will have to be paid back. I'm personally, for some, that's what I was. I mean, governments can't do anything more than that, but they can do in a better format. That's what I mean.
Okay, thank you. I mean, just one more, and the other questions we've got, we can follow up later or take them offline. But one of the questions is, and it may fall into Özgur's presentation as well. Which industries will be top priorities for Turkey as we come out of COVID, and which have the most potential for growth? Do you have a quick overview of that, Vedat Bey?
Yes, I mean, I see a question there about, says, yes, better governance within the government and the financial system, but when? That's a question we've been hearing, I mean, rightfully so, for a number of years. I'll just give a real life example. One of the biggest online retailers in the world, the one with the name with the letter A, when they were planning their entrance in the Turkish market, I had a meeting with them. They just asked for my personal opinions. And I asked them, look, in Turkey, there's so much political volatility. The financial system, needs so much improvement and all those problems. Couldn't you find another country? Why Turkey? I asked them. And the answer I got basically was very inspiring, was very teaching for me. They said, look, we don't care about politics. We don't care about short-term ups and downs. We look at the list of countries, and Turkey is number 15, 16, 17, whatever at the time. And it's time for Turkey, so we came here. In the long run, we have to be here, and we'll do business. If there are problems, political or otherwise, they can't be around forever. So I found that very wise and smart. And I think British history, if you look at last 300, 400 years, is full of success stories based on this kind of thinking.
Okay, do you want to cover that question about we have an anonymous attendee, so we don't know who's asking the question. Maybe we can leave that and cover it later. And there's Mehmet Gun has raised a question. I think you can see it there. Do you think that international precautions to combat pandemic will bring new opportunities between Turkey and UK?
Oh, I'm sure of that. I mean, I don't know if it will happen, but it has to happen. It makes very much sense if it does happen. I mean, after Brexit, I don't know how it will be, with or without a deal. But I'm not even sure if it will ever be. But I mean, it will for a number of weeks it will be with us. Okay. I mean, think of the history between France, Germany, and England and UK, and what the EU is doing, an aging population, the trade wars between China and the US. EU is in the middle, trying to calm down the world. I mean, if with UK out of EU is much weaker, but then UK, if it doesn't change course of economic cooperation, I think can also be heard. So if Brexit will happen, then cooperation between UK and Turkey in a deeper sense, in a more fundamental way, can only make sense for both countries. I don't see another way around. Not with Turkey only, there are other countries, but I think Turkey, with its population, young population, geography, proximity to UK, it's just only 3-hour flight, I think is a very good platform to tap into.
Okay, thank you. We've got a question here about, again, about priority or potential growth sectors. I'm going to ask Emre to come in and deal with that question. Emre?
Which one? Could you say it again, please?
On potential market, priority markets.
I mean, this is something that we discussed during our last webinar as well. I mean, of course, digitalization, technology, healthcare. I mean, retail industry will play a significant role, especially in Turkey, depending on the current circumstances in the market. But there are other, potential projects in, slower pace compared to the pandemic period, like, the mining, agriculture, all these industries can play a significant role, but I think it's still on hold process right now. So if you're talking currently, if you're talking about current market, I think we should live with the the realities. So healthcare, retail, partly construction in Turkey is still going on, are the main industries. They are still performing well, even though the pandemic's playing important role in Turkey. But I think Özgur can comment on this one. I think we should leave the questions and at the end of the session.
Okay.
We should Özgur on this one.
Okay, that's great. Well, thank you, Vedat Bey, and we'll be coming back to you with the second round of questions. I mean, one thing that Vedat Bey did mention about predictions and forecasts from economists. I was listening to another eminent speaker and writer on economies in UK earlier this week, and he was saying that a lot of predictions don't really have a lot of fact-based information, because under COVID, a lot of analysis is survey-based, and surveys don't actually give you reality. And I think he's quite right when he said it's difficult to put any faith in any current predictions at the moment. So yeah, we have to deal with this uncertainty as we go forward. Okay, let's move to Özgur. Özgur is the representative for UK Export Finance in Turkey, another very experienced individual in financial services and banking, previously with Citibank in the Middle East, a wealth of knowledge of the region when it comes to banking and investment, and he will be dealing with the areas that UKEF are interested in, and what potential there is supported by UKEF. So Özgur, over to you.
Chris, thank you very much. Hello, everyone. Good morning and good afternoon. I hope you can hear me well. I will start with maybe referring to what the professor said a moment ago in terms of how UK and Turkey are positioned vis-a-vis Europe post-Brexit. And there are a couple things between Turkey and UK. One of them is, for instance, that when we are going to continental Europe as Turks, we say we go to Europe, and so are the Brits. They say that they go to Europe. So we all call Europe as Europe. And another thing is, for instance, we consider ourselves, our both countries, as two bookends of Europe, historically, commercially, culturally as well. That it is, UK is on the west side and Turkey is on the east side, and they obviously help a lot in terms of building bridges towards the east, towards the west, transatlantic, and so on and so forth. In terms of trade, Turkey-UK trade relations, as Chris mentioned in the beginning, in the opening of his speech, that this really dates back over 130 years. It is the second oldest international British Chamber of Commerce in the world, after, I think, the one in France. Therefore, it shows that there is some history of the relationship, of the commercial relationship, as well as obviously the cultural relationship spread over centuries. When we look at the numbers in the recent years, and when we look really in the last 10 years or so, we see tremendous growth in the trade volumes. The trade volumes are around 19 billion pounds, and they have grown 63% over the last 10 years. And that positions us in the top 20, I think 18 on exports, 19 on imports, when you look at from the UK perspective. When you look from the Turkey perspective, it's even better. UK is consistently the second largest export market for Turkey, one of the key FDI, foreign direct investment sources for Turkey. So the relationship is already having some momentum. As you know, Turkey is part of a customs union with EU since 1996. And as UK departs EU, now a free trade agreement is being negotiated between UK and Turkey. Once UK signs the deal with the EU, how they're going to part the relationship and put it in a new framework, then it will be possible to sign, and hopefully before the year end, if everything goes well, to sign an FTA between Turkey and UK, which I believe will be a key element of taking the commercial relationship, business relationship to the next stage. I think the professor also mentioned the uncertainty given the COVID situation, right? It is the Turkish economy got its fair share. It's obvious that the second quarter was very bad, as it was everywhere in the world. Probably, as we see from the trade figures, trade will be depressed for a while. But today, we received the recent update from the Minister of Trade, Ruhsar Pekcan, that actually the June numbers, the provisional preliminary numbers of Turkey's exports did very well. Actually, they showed an increase of 15% compared to last year's June, and a 30% increase over May, the past month. So it shows that there is an effort for recovery on the Turkish side. Likewise, another example is, I think we've seen as the opening kicked in June, we see more stable currency. We started seeing probably more stable growth numbers into the third quarter. Now it's at everybody's guess. There are a number of figures ranging from -3% to -4%, -5% in terms of growth by the end of the year. But yeah, Turkey had done surprises before. Only 2 years back, after the hiccup in 2018, there was definitely a surprise on the positive side when Turkey really started the momentum of growth towards the second half of 2019. Now, what I do, just to briefly mention, is that I am, as Chris said, representing UK Export Finance, which is the official export credit agency of the UK government. I'm based in Istanbul. Actually, my office is in the British Consulate in Istanbul. And, my remit is primarily Turkey and the former Soviet republics, which are, 13 of them. The change in the recent years in terms of UK, in its 100-year history, was first time considering setting up an international network. And we started in 2018 along with 5 countries. Turkey was one of them. That shows again the importance that UK assigns to Turkey even before Brexit. We knew that there was a lot of potential in this geography, primarily Turkey. So we put one of our representatives here in the network, myself, along with 4 others in different parts of the world. Now we're growing that chain to 10 representatives in the rest of the year, and to 20 probably into next year. As I mentioned, UKEF has a 100-year history and has been accoladed by the industry magazines as the best ECA, the most innovative ECA, most friendly ECA to exporters, and all those things. But essentially what we do in a nutshell is that we finance basically UK's export contracts, but the value added that we bring as the international network is we track projects in the world, in the emerging markets primarily, which may have some issues with reaching out to commercial financing at meaningful terms, whether it's the quantum of debt that needs to be raised, or it's pricing, cost of funding, or it's the tenor. And we try to help out that the private sector financing cannot bring on to the table by providing a guarantee, by the UK government to improve the credit profile of a transaction. It can be an export contract related to a corporate, it can be a government, it can be a government company, a state-owned enterprise, it can be a project financing. And for that, we require, obviously, UK exports into that project. And those are a minimum of 20%. So we look, compared to our peers, the other OECD country ECAs. We're probably one of the most generous in that sense. So again, referring back to what the professor mentioned, that UK brings some comparative advantages, such as financing, such as governance, such as the global supply chains, into the Turkish comparative advantages, where there is some lack of finance, but more willingness to go out and build out, infrastructure, healthcare, energy, oil and gas, both in Turkey and the immediate region. So our role is really to make these projects financeable, bankable, with the help of, commercial banks, with the help of exporters, with the help of contractors, project sponsors, governments, obviously. What specific or signifies this relationship? I think I should mention that at this phase before stopping for the second round, is that there was a discussion on which sectors out of Turkey would be priority. Yes, Turkey has the traditional strength sectors, right? Textiles and apparel, auto and auto parts, chemicals, steel, cement. These are the conventional Turkish exports. And the UK, if you look at the Turkish exports into UK, they're pretty much comprised of, autos, textile, chemicals, some steel, so pretty much, and some home appliances, pretty much, in line with the export profile of Turkey. What UK exports into Turkey is, again, a lot of machinery, capital goods, some services, high value added services, some technology, some pharmaceuticals. So that shows that there is also a synergy there. There's no overlap. When we look at a third market together, and for instance, Africa was mentioned, when a Turkish contractor gets an infrastructure job in an African country, and decides to buy an adequate level of high value added technology goods or services from the UK, we're happy to look into it to finance the customer of the Turkish contractor. And that's a business model we developed in the last couple of years. We deal with, through the contractors, Turkish Contractors Association here, we deal with the top, I would say, 20 contractors, which has international background of, internationally financed projects, large projects, and they are very resilient. They are all over the place. And I give the example, they're big in Russia. Something happens, a jet is downed one day and everybody, is worried what's going to happen with our international contracting business. And next year, Turkey gets awarded the largest contract ever, a $4.6 billion contract for building an airport in Middle East, right, in Kuwait. So then the following year, people say, well, this is so large, it's a one-off, how are we going to make up for it? And then you get $2 billion railway projects in Africa. So this is a very resilient business. It's scalable, it's repetitive, and diverse, both in terms of geography as well as industries of clients where they are. So we're definitely looking into building our cooperation into that area. So Chris, let me stop here, and I'm sure there will be more to talk in the second round.
Okay, Özgur. Thank you for that, and thank you for making people more aware of UKEF, because for me, it's been a game changer in terms of our international presence and the support that UK government is now providing through UKEF. So a lot more to do and a lot more potential to explore. So thank you for that. I mean, moving on now, we come to the second round, and we're going to be looking at more macro indicators and the way forward. I mean, just to put a bit more context to the way that UK government see Turkey. I mean, it's a high priority market, and it will continue to be a high priority market. And as Özgur mentioned, we are negotiating with the Turkish government on agreeing a new FDA. So it's something that is going to be critical as we go towards the end of the year. But we're in a situation where we have two willing parties who are committed to getting a mutually benefit FTA, and we need to protect our almost £19 billion of bilateral trade as the first priority, and that's the base that we want to build on going forward. And a solid, mutually beneficial FTA is going to be critical in achieving that. And if you look at, it's not just UK that see Turkey as a priority market. I know for a fact, because I sit on what we call the European Bilateral Trade Chambers, which includes the German chambers, the French, Italians, and so on. And they're all of the same mind. They see Turkey as a real potential growth opportunity. So we've got to be very, very competitive in the way we approach the market, and I believe we are more competitive than some of the other European countries. I mean, UKEF is a fine example of that. And also the work that we do at BCCT in collaboration with DIT, we're always working to ensure that we stay ahead of the trend and make sure that all the potential that Turkey has to offer, we keep at least the level of market share that we currently have, and they're obviously looking to increase that. So, I mean, the opportunities are here, and we just have to make sure that we all come together and make sure that after COVID-19, we're in a stronger position then than we are now, and that's the clear objective. So moving on now to Vedat Bey. I'm sure he's got some more very good insights to share with you. So I'll hand it over to you. Thank you. You're muted.
Okay, thanks, Riz. I think I was planning to talk about what should be done from my viewpoint. I mean, think of, because talking about what should be done, China, trade wars, we don't know how it will evolve, and the fact that regionalization of supply chains is coming up. I mean, you want to be closer home, and that's a fact. And rising protectionism. For example, Japan already declared a very close scrutiny on foreign investments in their countries. The European Commission has a white paper out. I think they are waiting for comments until September on how to protect the Eurozone from potentially socially undesirable foreign investments, meaning China mostly, I think. Those trends are coming up, so we have to prepare for the post-pandemic recovery. I mean, 2 months down the line or 2 years down the line, I don't know, but it will come. I think an FTA between the UK and Turkish governments, an improved one, but a fact-based one. Just like tariffs and custom fees, but beyond that. I mean, FTA can be a guiding light for business. So that FTA has to be very wisely and detailed and put together. That's very imminent, I think, need. Now I have to talk about finance. That's all I've been doing for years. The matter of currency of trading. Chris, I mean, as a professor of financial engineering, I have difficulty understanding, and I know why, but difficulty understanding the reasoning behind why a UK company and Turkish company should have a contract in dollars or yens or whatever. I mean, not in sterling pounds or Turkish liras. Now, before the EU, more than 60%, this is like 20 years ago, more than 60% of UK-Turkish trade was in pounds. And today, that number is down to less than 7%, 6 to 7%. The rest being in euros and mostly USD. And you have pounds as the medium of exchange in England. We have liras here. And when you trade in another currency, be it dollars or euros or whatever, anything other than liras, and that brings in currency risk for both sides. That is very unnecessary. very unnecessary. I think central banks, more than any other institution, the two central banks, Bank of England and Central Bank of Turkey, should work on mechanisms, including proper swap lines. That's a hot topic these days. I won't go into details. To facilitate trade and investment in pounds and Turkish liras. And why plug in a third currency? That is unnecessary financial burden, financial risk. To be able to do that, I know from my previous job that the London Stock Exchange and Borsa Istanbul has very good relationships, or they used to have. I'm sure they do also now. They can get together, they can design and issue instruments which will enable UK and Turkish business people to easily obtain and liquidly obtain convertibility between the two currencies, including hedging products. I mean, if you are spending pounds in London, you want pounds. If I'm spending liras in Istanbul, I want liras. So if I get my liras worth or you get your pounds worth, who cares about another currency? And that can be done very easily. I'm sure in London there are thousands of people who would better than I in designing such instruments. That can be done. Take a leading role. If we set up a proper financial mechanism behind the important thing of trading and investment, I think trading and investment can be much easier and in much bigger volumes. That's very important in my view. One final thing I want to say, Chris, is that we never talk about equity investments, partnerships, private equity. As cruel as they may be, private equity is a smart idea. For example, if a UK company becomes a partner in a Turkish medium size, I don't want to talk about the big ones, the medium size and maybe a little bit smaller ones. A partner, 10%, 20%, the number is not important. Be a partner with a say on management, on governance, with a veto power on certain decisions, and make the investment and grow together. Know-how and financial management know-how will come with it to the Turkish company. And knowing that the Turkish company owners want to be richer, want to do bigger business, want to go more international, and then the UK business wants to protect its interests, financial interests and legal interests also, as a protection. Be a partner and protect your own self. Now you'll be a local player. When risks are, this is a much smarter credit, believe me. Özgur Bey, it will be less burden on you when they do that, but I think, I'm sure you can change your articles of business easily to accommodate these things. I think post-pandemic, between the two countries, can help us bypass many of the legal, political, and all those, problems that are basically obstacles in our way. You could invest, be here, be a partner, do what they are doing, direct involvement, and then grow together. That would be my academic advice, which is a better advice than forecasting the currency rate, exchange rate.
Okay.
That's how I think.
Thank you, Vedat, and great advice. We will be probably coming back to you for a few Q&As later, but I mean, this particular model that we advocate at BCCT is for UK companies to engage with a Turkish company and form a mutually beneficial partnership. And that's a model that we see works extremely well. And particularly if you can identify a Turkish company, which we will help you in identifying the right Turkish company to partner with, and make sure that all the due diligence is done, and the company that you're working with is sustainable and viable. if you can find a Turkish company that not only has a strong presence in the domestic market in Turkey, but also has, you know, a strong presence in the region. So if you look at North Africa, where Turkish companies are very strong, you look at the Middle East, and obviously, you know, the former CIS countries, which are part of the new ECAN region. If you've got Turkish companies that operate in these markets, then, you know, that will give you a stepping stone through your Turkish partner into these markets, which, you know, will ease the path for you. And as I say, this is something we can discuss offline in terms of, you know, what we offer UK companies in order to do that. But you know, it is a model that does work, and it's a very efficient way of actually entering the market without taking the risk of doing it, you know, on your own. But as I say, in UKEF, you know, come into that as well. So I'm going to move to Özgur now and let him conclude his second round presentation, and as to how, you know, we can get UKEF involved. Thank you.
Thank you, Chris. Thank you, Professor. Yeah, what can be done post-COVID, right? That's the biggest question. And I think one of the initiatives that the Turkish authorities are taking is to rebuild Turkey in a stronger way into the global supply chains. Now, you have a lot of rhetoric around the world, you know, from the other side of the Atlantic, including Europe on this side, that the supply chains that are dependent on China due to a variety of reasons, historical reasons, cost reasons, market size reasons, efficiency and productivity reasons, proved to be somewhat problematic, right? I mean, we've seen disruptions in the supply chain, and I think many countries, including UK, are looking into diversifying their procurement models or footprint if they are in manufacturing businesses in those countries. And I think Turkish government stepped up to the challenge. They very vocally mentioned that they want to be part of that supply chain, and they are, I think, taking the necessary steps, you know, by having these relationships, by either signing FTAs or really incentivizing, you know, the foreign direct investment into the country. Now, what can we do in terms of helping out to the UK exporters? Let me start with, I mean, taking a step back and having our mission. As I said, we're part of the government, and we are, you know, our remit is being an export credit agency, and our mission is really making sure that no viable UK goods or services exports fail due to the lack of financing, of course, at no net cost to the taxpayer. So we are a self-sufficient mechanism, almost like a bank. We do country risk and credit analysis. We allocate, you know, limits, credit appetite transactions. We manage our portfolio actively by reinsurance and selling down exposures here and there, and develop products, right? In the first part of the conversation, I mentioned maybe more on the origination, business development, front office, how we wanted to grow. But obviously, an important part of the initiative is having new products. One of that, maybe in line with the discussion on the currency, right? The professor mentioned, you know, 10 years back, currency was around at par to dollars, right? For practical purposes. Today, we see almost 7. So, and not only this high amount, we see high inflation, we see a lot of volatility, which we've survived in the last few years several times. So understanding these risks are important, and one of our roles is really to help you out and to help you manage those risks, really. We provide financing in over 60 local currencies, along with hard currencies, which we call G7 in the banking lingo. These are the dollars, euros, British pounds, Swiss francs. But we provide also financing in local currencies. Turkish lira is one. So that is a way, if you have a contract, you can have it in whatever currency. You can have it in Turkish lira, you can have it in British pounds, dollars, euros, whatever. But your client, if you finance them, if they're a domestically serving client, can borrow in Turkish lira through the cover we facilitate for them. And for the bank who's going to fund this, it's going to be a great risk enhancer because it will be essentially the ultimate full patent credit of the British government, where we guarantee that transaction over and beyond the borrower here. And that will allow a Turkish company, if they are a domestically oriented company, you know, they are a petrochemicals company, they're a retail, industrial company serving domestic needs, infrastructure in transportation, their cash flow is entirely in local currency, then we can match that to our local currency financing. So that works not only for Turkey, but 60 plus countries. So it's not only the main emerging markets currencies, but also some, you know, frontier markets, more exotic currencies as well. Another way, maybe more inclined to cater our UK exporter base, who are, you know, part of the audience today, is that we provide some insurance on their receivables, right? We can, if they have an issue in, say, Russia, you know, they think that they have a great client, a distributor, and at times, you know, they're worried about, you know, their stretched balance sheet or ability to borrow and, you know, pay on time and in full. We can provide credit insurance to UK exporters. There's another product called for performance bonds, right? Bond insurance. When you have, as an SME, let's say, you don't want to set up all of your limits with banks for providing these performance bonds, bid bonds, liquidity bonds, you know, and retainer bonds. Yeah, then, you know, we can provide some cover to the bank beyond their credit limit. So that will both enable the transaction as well as, you know, reduce the cost of it probably. Speaking of equity investments, we don't consider ourselves as a competitor to the private industry. Now, UK, we all know for the last 600 to 700 years has been the center of the international finance consistently. It's not going to change with Brexit because Brexit or EU was a 40-year history for UK, and London was a financial center for 600 plus years. So it's not going to change. So UK is abundant with private capital in all forms of debt and equity. So it's private equity, VC, you know, regular IPOs, SPOs, a very active, very deep international market. It's not as big as, not as deep as New York. It's the second, but it is the most international. So many companies who want to really step out of the country go to London to issue to LSE. So we don't consider ourselves necessarily in competition with private sector. So there is a lot of opportunities, but there are times really that for a company in the UK who wants to have a footprint in Turkey or in former Soviet republics, or want to export there, they may have difficulties, their clients may have difficulties, and commercial financial industry is not always a solution. There we come in, and as I mentioned the first part, we provide financing for your customer in Turkey, for the project sponsors in Turkey, for the contractors, for the government, local governments in Turkey. And it could be in local currency as well. But another, I think, important aspect of that is that if you want to have an investment, and that is a capital outlay, right? You put your own money in setting up a business, either as a partner to an ongoing Turkish concern or a completely greenfield company. Then, as many other export credit agencies in the world, we do have programs to ensure, you know, the political risks. As in all countries and in our region, in all these 14 markets, we can ensure political risk. The only two conditions that we have as government is we don't want to compete with private sector. So we're not going to quote out private sector. So you should talk to private insurers first. And if the commercial market is not feasible, it's not available, it's very expensive, it's not desirable in a meaningful sense, then yes, we can have a conversation. And, you know, I'm not going to say it's extremely cheap to insure political risk around the world. But yeah, if it's going to make things better, viable, or doable for you in the country, yeah, we'll look at that. The other condition would be that we need to have that conversation before the capital outlay. We can't do anything post the fact. So it has to be before, of the foreign direct investment in Turkey or in any other market. I think in a nutshell, Chris, we were able to cover most of the agenda. I know that there are a number of questions that are lining up. Unless you have anything else for that, we can move on to the questions.
Özgur, just, I mean, we do have quite a few questions about, which sectors offer the greatest potential. I will mention a couple also, but if there are, some indicators from you, which sectors do you see as offering the greatest potential going forward?
Absolutely. I'll start with Turkey and expand into Eastern Europe and Central Asia. Now, Turkey in this market is our second largest GDP market, and it's our largest export market as UK. So we're bigger than Russia, we are bigger than the rest of the countries. That puts Turkey, just put it in a greater context, the trade volume with Turkey puts Turkey at par with countries such as Brazil. We're bigger than Brazil, bigger than Mexico. We're bigger at par with India and bigger than Russia. So if you look at the BRIC countries in terms of UK export relationships, we're probably, except for China, bigger than all those. And it's mainly all sectors. Now, UK is a service-dominated economy. Maybe the main difference between Turkish export profile and UK export profile is the dependency on services. UK is extremely good in consulting services, design services, project management services, and construction services. Turkey is very good in building out. They are second to none, really, in terms of the quality and cost aspects when it comes to Turkish contractors. It's a very good manufacturing base, right? Especially in autos, in chemicals, in textiles and apparel. Steel as well, more and more. If you look at our sort of industries, what we have as UKEF, we call ourselves as sector agnostic, right? By the government policy, we're open to all the exports. So all the exports that qualify the minimum 20%, goods or services, and we think that they're viable projects, right? This is our discretion there to be able to assess the credibility, because we take long-term risks on the project or on the country. Then we will be happy to do it. But inevitably, if you look back in this region, what do we do, right? That would be a hint to the audience that what are the more priority ones or more popular ones, if you will. I would say infrastructure inevitably in Turkey is one. Energy, and when I say energy, I cover power more. Renewable energy is getting big. The CIS region is energy and resource rich in general. So inevitably, when you have large countries there, you have, which are energy powerhouses like Russia, Kazakhstan, Azerbaijan, even Uzbekistan and Turkmenistan, there's an oil and gas sort of a both upstream, midstream and downstream opportunity flow, which is one of the greatest gas suppliers to the world. Is we have projects in cement industry, we have projects in shipbuilding. Although they're landlocked, they have a coast on the Caspian Sea, which is an inner sea. So we have shipbuilding projects that as opportunities there. When we move to the north and east, Kazakhstan and Mongolia, I would say, and Ukraine probably, mining is also an interesting area. Healthcare is interesting. Now we're involved in one large healthcare project here, which is still in the works. But Kazakhstan is launching a PPP model, just like Turkey's or the UK's, and there is a lot of interest for that market. So in a nutshell, we're agnostic for all sectors. We look at the project and decide on case by case, depending on the project dynamics, the export levels, the viability, the advice from the bank that will fund the deal ultimately are under our guarantee. But yeah, there are some ones that are more winners than the others, more popular than the others. It's infrastructure, healthcare, renewable energy, which is getting big and big, oil and gas, and mining, for some markets.
Okay, let's go. I'm going to come to Vedat for a few last words, but just on this, sector potential. I mean, obviously, you're focusing on some of the big infrastructure projects, the big ticket items, but also you're there to support SMEs as well. I mean, we're dealing with BCCT on B2B inquiries for Turkey. So the majority of those B2B are mostly SMEs and large mid-sized companies. I mean, food and beverage, we've seen an upturn in interest for UK exporters in food and beverage. We're also seeing a lot of interest now in green issues, environmental issues, because UK has a very strong capability in these environmental areas, which Turkey is working to catch up in some respects from where they are now to provide a more green economy, and we see a big opportunity there. And this is part of working with our colleagues in DIT. We will be looking at, probably when it's appropriate in the new year, to look at a green conference in Istanbul. So this is very much on the agenda, and to build on established success in technology between UK and Turkey. We've been doing a technology conference in Istanbul that Özgur is very familiar with in the early part of the new year, and the conference we had this year was a tremendous success. I mean, we had approaching 900 delegates, large contingent from UK, and representatives from Turkish technology sector, startups that are now proliferating in Turkey in technology and digital. And given the way we're going to come out of post-COVID, and digitalization and transition is going to be a big opportunity. And Turkey again is well placed in that space to work with UK companies on digital transition, and that's something else that we make sure that we capture that, and encourage more UK companies to look at partnerships or investments with Turkish companies on digital transition. So a lot going on, and I'll go back to Vedat Bey just for a few last words.
I think talking about the sectors, maybe I missed it, but we should not forget about agriculture.
Absolutely.
With this climate change and everything, waiting for the world. I mean, agriculture, enhanced with some technology, I think is the sector of the future. I mean, we have to eat, and we can use the phones. And this new digital technologies, Chris. I mean, I hate to see my students, the brightest ones, going to smaller countries where there's not much regulation, or where they are more accommodative. Startups. I mean, they can't do it in Turkey. They can't do it in the UK because of lack of regulation, or because of unfavorable behavior by regulators, whatever. I mean, that's coming up. Digital technologies, not only in finance, in agriculture, healthcare, so on and so forth. So I think for the younger audience, I think technology is not just technology. The new technology is a new sector. I mean, that has to be looked into. That's critical. Maybe second to agriculture. Technology.
Okay, Vedat. Well, we have some good news in that we have a technology, UK technology company who's now partnered on digital or technology in agriculture. So there has been a first step in that direction. So we're looking forward to build on that. But I think we're coming to the end now. I mean, any questions that you know we currently have, we can take offline and respond to them. But I just want to just emphasize the point of the amount of resource and capability and infrastructure that we have in Turkey to support UK exporters and also support our members, Turkish members in BCCT. I mean, you've seen by our two eminent speakers here the knowledge that we can access when it comes to financial services sector, and again, working very closely with the DIT team, we have a large amount of capability and networks that we can access to support our bilateral trade. So all we want to do is ask you to use it. We're here, and that's what our job is, and we want to encourage you to look at Turkey as a high potential market, and we'll provide all the support and backup to ensure that that journey is as risk-free as possible. So I bring it to an end. I want to thank everybody who's attended. We will be having more webinars coming up. We've got one coming up on education in the next week or so, which we'll be informing you about. And we've got several others that we're actually planning towards the back end of July. So to everybody, stay safe, take care, and we're looking forward to seeing you again soon. Bye.
Thank you.